The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in.
Right. Our mission today is a fast, targeted review. We're covering the major developments, the big financial shifts, and some really crucial tech updates that are impacting hotel leadership this week.
And looking at the sources, especially in the APAC region, the story seems to be all about scale and very strategic location choices.
Absolutely. We're seeing a lot of new properties, a lot of brand debuts, but none of it feels random. It's all very intentional.
Let's start in Australia then. We've got the Crowne Plaza Geelong, 200 rooms, now open. But the interesting part is its physical link to the convention center.
Yes, that's the key detail.
Yeah.
That attachment is, well, it's a built-in demand generator. It practically guarantees a baseline for midweek business travel.
A guaranteed floor for occupancy. Okay. And then up in Queensland, Adina Chermside is on the books for February 2026.
It is. And this is a big one for Brisbane's northern corridor. It's set to be the largest hotel in that area, and it's specifically targeting the Prince Charles Hospital precinct.
So we're talking high yield, longer stay, medical, and corporate traffic.
Exactly. It's about securing that non-discretionary demand. It gives the property a level of resiliency that, a standard leisure hotel might not have.
And on the luxury end.
The Waldorf Astoria Sydney is on track for a late 2026 debut. It's their first property in Australia, right there at Circular Quay, a 25-story tower. It's a huge statement.
A real flagship. And there's also the Ardour Milton Park unveiled, a big transformation of a historic estate.
Right, that one's reopening very soon. So strong domestic moves, but I think the biggest strategic play we saw was about how global brands are finding new ways to achieve scale.
Okay, you must be talking about the Unscripted by Hyatt global debut.
Yes, this wasn't a slow buildup. This was an instant market entry, all done through a partnership.
So Hyatt teamed up with Indochina Kajima, and they're basically converting 6 existing Wink hotels in Vietnam into this new brand.
Exactly, and a 7th is coming in Hanoi. The immediate impact is just dramatic.
Yeah.
Hyatt's footprint in Vietnam jumps from 4 hotels to 10.
Wow.
Just like that. Over 2,000 rooms added to their portfolio. But the really clever part is the strategy. They're leveraging a brand, Wink, that already has a strong local identity. It's design-led, tech-savvy.
It already appeals to that modern, experience-focused traveler.
Precisely. So Wink keeps its cool local vibe, but it gets plugged into Hyatt's massive global distribution system. It's a brilliant hybridization model.
A really sophisticated way to get scale without, sacrificing that local character.
And then in Singapore, we're seeing continued investment in new construction. The URA has a tender out for a hotel site on Teluk Air Street.
Prime CBD real estate. What are the numbers on that one?
It's a decent-sized site, about 4,200 square meters. It could yield something like 440 hotel rooms, plus about 135 long-stay serviced apartments.
All in a 30-story tower right near the MRT station.
Right in the heart of it. It signals a real commitment to keeping that high-end corporate and long-stay capacity right where it's needed most.
And speaking of scale, let's look at Osaka. IHG is making a massive move near Universal Studios Japan.
This is where it gets really interesting. It's their biggest new build project in Japan, but it's also their very first triple-branded property.
Triple-branded?
Yes. Opening in 2029, it's an 817-key complex with an InterContinental, a Kimpton, and a Holiday Inn resort, all under one roof.
So you have luxury, lifestyle boutique, and a family resort all in one spot. That's complex. What's the advantage?
It is complex, but it's about total market capture. They can cater to literally every single segment of traveler coming to the theme park and the wider area. Yeah. And on top of that, they'll be the only internationally branded hotels there when they open. It's a very calculated, future-proof play.
That's a perfect segue into the money behind all this. Let's follow the capital, which seems to be flowing just as aggressively this week.
It is. The capital movement is robust, and it's heavily focused on high-quality, proven assets, especially in Australia. We saw a couple of really significant acquisitions.
Let's start with the big one in Surfer's Paradise.
Right. Taiwan's Lin family acquired the Paradise Center and the 408-key Novotel Surfer's Paradise for AUD $370 million.
A huge number. But the story here isn't just the hotel, is it? It's the mixed-use aspect.
That's the core of the strategy. It's about hedging your bets. You have the hotel, yes, which taps into the tourism economy, but you also have 23,000 square meters of retail space with strong tenants like Woolworths.
Which provides a much more stable, less seasonal cash flow.
Exactly. It diversifies the income stream and makes the whole investment more resilient.
Makes sense. Okay, and on a smaller scale, there was another deal in Ipswich.
Yes, an Australian private investor picked up the 64-key Quest Ipswich for AUD 14.2 million, so roughly $222,000 per key.
A strong price.
A very strong price. And this investment thesis is different. It's about securing a quality asset that's close to reliable demand drivers. Business parks, hospitals, defense hubs. It ensures predictable, year-round business.
And I saw there's a refurbishment plan for that one, too.
A $1.2 million upgrade next year, so it's an immediate value-add play. And we're seeing that elsewhere, like the $4 million redevelopment at Mercure Clear Mountain Lodge.
Okay, so let's unpack this. What do these acquisitions and developments tell us about the broader market right now?
I think three big trends really stand out. First, foreign capital is a huge driver. Reports are suggesting 2026 will be a supercharged year for transactions, and that money's mostly coming from overseas, particularly Southeast Asia.
And that's because Australia is seen as a safe bet.
It's seen as a safe haven. You have a resilient economy, political stability, and really strong occupancy rates. For offshore funds in a volatile world, Australian assets look very, very attractive.
And the second trend, you mentioned it earlier, is this idea of buy versus build.
This is the major pivot we're seeing. Developers are shying away from new construction. They're acquiring and renovating existing assets instead.
And that's all about cost.
It is purely about cost efficiency. Construction costs are forecasted to grow another 6% through 2028. It's just becoming too expensive to start from scratch.
But switching to a renovation strategy has its own set of risks, doesn't it? I mean, it's not a magic bullet.
Oh, absolutely not. You're trading one set of risks for another. Instead of cost inflation on a new build, you're dealing with unexpected structural problems, navigating tricky permits, supply chain issues for high-end fittings. It requires a really intense operational focus.
So you swap construction risk for renovation risk.
Okay.
And trend number 3, which market is leading in performance?
Right now, it's Brisbane. It's the top-performing market in RevPAR growth, up 11%. It's actually outpacing Sydney and Melbourne.
And what's driving that?
It's a combination of things. Massive public infrastructure spending, a lot of corporate relocations, and, honestly, a relative lack of new luxury supply to meet the growing demand.
So Brisbane is really cashing in on its long-term planning. And before we move on, a quick note. The Park Hyatt Sydney made Condé Nast's Gold List for 2026.
A great nod to Australian luxury. Which brings us to the digital world. We've talked about the physical assets, but now we need to talk about how people actually find and book them.
Right. Visibility in the age of AI. This is a big one.
It is. The entire landscape is shifting under our feet.
For the last 20 years, it's all been about SEO, search engine optimization, getting to the top of Google. But now generative AI is answering questions directly. How do hotels even stay visible?
Well, the paradigm has shifted so much that we really need to stop thinking SEO and start thinking GEO.
GEO.
Generative AI optimization. These AI tools are now at the very beginning of the traveler's journey. They're providing these personalized conversational recommendations. The old search funnel is getting bypassed.
Because the user asks something like, plan me a family-friendly trip to Osaka near the theme park, and the AI just gives them an answer. They might never even see a list of search results.
That is the visibility crisis right there. And the critical point for leaders is this. The AI can only recommend properties if it has clear, accurate, and AI-readable content.
Okay, what does AI-readable content actually mean in practice? It sounds like more than just having a nice website.
It's much more. It means highly structured data. It means consistent information across every single platform, your own website, the OTAs, GDS, everywhere. If your amenities on one site contradict another, the AI sees that as unreliable data.
And it just drops you from the running.
It will ignore you, even if you're the perfect hotel for that guest. So inconsistent information is no longer just an annoyance. It's a direct threat to your revenue because the AI will systematically filter you out.
So data hygiene is now a core operational issue, not just a marketing task.
It is a fundamental imperative for driving future bookings. A huge shift.
A huge shift indeed. Okay, finally, let's cover the stars in motion. We need to acknowledge the talent moving across the industry this week. This is a quick bulletin of the key personnel updates.
Absolutely. The industry is always dynamic, and we're seeing people moving into some really key roles.
Starting off, Primal Fernando is the new Technology Engagement Manager for Australia and New Zealand at InterContinental Hotels and Resorts. Thomas Anand is now Front Office Manager at Accor.
Jason Cleesby has taken on the role of Hotel Manager at Doubletree by Hilton Auckland Karaka. And over in the Middle East, Mustafa Abdallah is the new sales manager at the Nile Ritz-Carlton in Cairo.
We have Christina Grasso as the new portfolio general manager at EVT Connect Hospitality, and Jared Monteague is now group operations manager at Rolled Hospitality Group.
There's also big movement in advisory. Wesley Milsom is now executive vice president for the Hotels and Hospitality Group at JLL, and Cassie Barnes is the new general manager at Travel Plus Leisure Co.
In commercial leadership, Antonio Bissoni is the new vice president of commercial at the First Group Hospitality, and Florian Kittler is managing partner and global practice leader for hospitality at Cornerstone International Group.
And underlining that tech shift we just talked about, Rohan Jani is now vice president of guest technology products at Hyatt. Shady Emmer has been named director of operations at Accor.
Rounding out our list, Mehdi Han is now hotel manager at Langham Hospitality Group. Ying Ying Ko is vice president for Holiday Inn Express and new brands in Greater China at IHG, and Simon Aldrich is the new director of finance at Mayfair Hotel.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry.
Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world.
Until next time, stay well and stay ahead. See you next week.